Hey traders, Raghee here. Let's get a quick audio and video check in. Should be good to go. All right. Good to see everyone. Happy Tuesday. Hope everyone is doing well. All right. Welcome to everyone new to the room. Yes, Eric. Good morning. Great to have everyone. If you're new to the room, I do realize a lot of folks are joining us on the trial that we have, or you're coming in. Awesome. Love simpler trading. Absolutely. Okay, so I've got the notes up and running. So I wanted to let everyone know we got some new faces in the room. If you move your cursor up into the alert section, even just yesterday, Mondays, I do a little bit of a kind of a dump of all those great things that are going to get you started in the room really easily. And you'll find, first and foremost, the Raghee notes for the week. So every single week, I share with you my personal notes, the things that I'm looking at, the notes while we're in the room together, trade management, day trades, all that stuff are in the Raghee notes. But probably the first thing you'll want to take advantage of, especially if you're new in the room, is at the very top of the Raghee notes, there are 4 videos. There's a video on how to use the alerts, how to navigate the room, how to position size your trades, and how to access the free tools, the free indicators and layouts that we make available to the Sector Secrets Mastery members. So it's an immersion when you're here. I give you everything you need to get started on day 1. Check out those videos. They run about 6 minutes each. Give yourself about 25 minutes and you will be up to speed on what you need to get the most out of the Sector Secrets Mastery. We've been going through August, and I got to say, for a summer doldrums month, this is easily the heaviest month of sort of this summer doldrums, where the volume is low and participation can be low and price can be a little flighty. We have the tariffs going on. We have uncertainty about that. Russia, Ukraine, US, China. I mean, all the things that would make for uncertainty and maybe some difficult trading. And yet, I'll tell you, as August goes, this has been a pretty darn good August. So let's start off with what we have open. These are all recent trades. So if you've joined in the last week or two, you've got, if you joined since the end of July, every one of these trades were opened either August 1st or later. So in the last 11 days, Google, BKR, Schwab, RTX. Now, BKR, because crude oil continues to struggle, it's on the struggle bus too. But remember, we're not risking 100% premium. Every single alert, I tell you how much we're going to risk. That stop loss is in every alert. So while BKR is probably going to be, I'm imagining I got stopped out of one leg of it, I'll probably get stopped out of the other. Paper cuts, tiny losses that don't erode all the great winners that we've got. Google's at plus 300%. We scaled out of Schwab yesterday at T1, and RTX we've already scaled out of. So I can't complain. I can't be angry at August. So let's take a look at what we've got going on today. Today was the big CPI number, and while the PCE is the favored metric for inflation for the Federal Reserve, that's the number, the PCE, that they use in their measurements of what's happening with the economy. That's what's in their models. I mean, it's the CPI that is what you and I are pretty much living. It's a much more realistic look at inflation. And what's really interesting about that is it came in line. So inflation was not hotter, it was not cooler, it was flat. So it came in as expected. And I would say also as expected, then because of that, we can see that the expectations for rate cuts are up near 90. Oh gosh, even higher. So 1 hour later, We're 94.2%. Now, what's really interesting is we have two Fed speakers up this morning post CPI, one at 10 o'clock, one at 10:30 Eastern, Barkin and Schmid. If they want to talk down, so look, every time an FOMC member speaks, they're either talking their opinion or they're giving us some insight into what's happening within the hallowed halls of the Federal Reserve. I imagine them like the Justice League cartoon of my youth. And if they want to talk this down, if they have no intention of cutting in September, every single Fed member can talk this down. If they don't, what the Fed Fund futures are going to continue to do is say we expect rate cuts and it will stay elevated. This is fully discounted, gang. This is a current reading on the Fed Fund futures that says, look, Federal Reserve, you got to cut. Unless you tell us otherwise, we are absolutely going to expect a 1/4 point cut in this September 17 meeting. And by the way, gang, that's why stonks are up. You might say of all the things that are worrying the markets, S&P, NASDAQ, bonds, gold, it's crude. When you've got the Federal Reserve willing to cut rates, that sort of is a Band-Aid for everything. So you can see we shot up on CPI. We pulled back a little bit, but we're still well above the previous session close. All right. Consumer prices rose 2.7%. Now, that in itself is not a meaningful number, but expectations were based on those tariff concerns that consumer prices would be higher. And they're not. Yet another reason to be up. One of the concerns always in an environment where the Federal Reserve hasn't cut yet is the consumer being, are they resilient? Are they still buying things? So retail sales, new home sales, all those things are going to be metrics of consumer health, not to mention, are they employed? We got non-farm payroll already, so we know how that went. OPEC expectation for demand remains at 1.2 million barrels per day. That's unchanged. And you can see crude is actually moving lower on that. So I'm probably going to leave swing trades on crude and oil stocks on the back burner. We'll see if the BKR position can rally, but it's going to be under the weight of this heavy crude. So keep that in mind. US dollar is going to continue to be weak. This is perfectly normal, gang. Don't let anyone send some sort of panic over US dollar weakness. Any country whose central bank is preparing to cut rates, and right now expectations are for 2 1/4 point cuts, that currency should be weak. And when you look at the euro US dollar, this is the tightest, steadiest correlation between any two symbols, not just currencies, any two symbols on the planet. If the ECB is not dovish, meaning favoring lower rates, and the FOMC is dovish, then that means the euro should climb and the dollar should fall. Perfectly normal. So between CPI and ECB news, US dollar should be weak, and probably doesn't make much of a difference to the positions that we have on. All right, so quick look at our morning schedule. We're doing our opening bell intel, our morning prep, hot zones, sentiment, levels, symbols to watch. We're going to get our FOMC speakers at 10 and 10:30. That does mean we have a time crunch here this morning, gang. In other words, if I'm going to put any day trades on this morning, ideally I get them on before 9:45 or 9:50, because I want the choice to be able to cut that trade, to close it out before the hot zone, before that speaking engagement, before that scheduled high impact number or high impact event, in this case, Fed speakers, are happening. After around 10:30, actually around 10:25, we'll take a break. And then we'll come back with swings. And that's exactly what I was showing you here. These are all the swing alerts that we have open at the moment. We'll continue to manage those. 3 out of 4 are really doing really well, very well. And one due to that ultimate, when we have the heaviness of the crude oil market, we can definitely see that's going to affect oil stocks. All right. So the next thing I want to take a look at here is what, if anything, I want to do on the bell. And actually, all 4 of the indices are looking pretty interesting in terms of what I'm going to be dealing with. probably, I'm going to go jump on over to the RTY here, because when I'm looking for alignment between what's going on with the Russell, and I'm looking for something very specific. I'm looking at the Russell. Let's take a look here. And I'm looking at the green zone of the hourly price movement range. So our automated volatility, support and resistance. And I want to see that it's either above or at least mostly above the previous session close, which is exactly what we have. So RTY looks really interesting. Now, let me show you by contrast what's going on with the NASDAQ. So I'm going to take a look at the NASDAQ here. And when we take a look at the NAS, what we're going to notice is that that alignment isn't quite as good. It's not that we can't use it, right? Not by any stretch. Is that going to be an issue? What we want to remember, though, is when we have the NASDAQ, here's our green zone. When we have a NASDAQ opportunity, it's either going to be because we've organized into an uptrend, right? Or that price is sunk down to this level down in here. But I really only have an aggressive or aggro position sized entry that I can take advantage of. And I would use a tighter stop on that position, because once we sink into the hourly price movement range, we're going to be below yesterday's close. And I'll just tighten the stop. Could it bounce? Absolutely. You can also see, this is also interesting, that usually on the bell, we get these candles of unusual size. We get these large candles that are reacting to the open. And we actually don't have that at all today. So usually there's these huge candles on the bell and things are pretty sedate, likely because this has already happened. There's already been a huge response to that CPI number, and we're not getting that giant candle right on the bell, which is so often the case in the morning. So if the Russell were to sink down to the, there we go, to the hourly price movement range, that would be definitely be something I would like to take a look at. So it's a little early, right? It is a little early. I would rather wait till about 9:35, but this could be an interesting opportunity. So this would be the IWM. Let's take a look at this here together. The bell is rung. It's time to get to work. And what I'd be looking at is the IWM. And I'd be looking specifically at let's take a look at the 12 August. 12 August 220 or 221 call. Now, I could go out to August 13, but it's not as liquid at that strike. So I'm going to stick with IWM, 12 August 221, or if you want to be a little deeper in the money, that's fine, 220 call. Now, here's the thing. I'm going to put on my aggressive position size buy when the Russell futures reach 2231.7. I know that would be aggressive. I would put on a moderate position size buy once price gets to, I'm actually leaning towards maybe the previous session close. So maybe split this range into just two pieces, 2225.4. And that really could be conservative. And the big difference between that conservative, and this isn't just a cutesy name that I title these with. This means that if you take a look at our position size guide, it's in the file section of the room. And also check out the position size guide 101 video, which runs just 6 minutes long. You'll realize there's a specific number of dollars I will allocate to the trade. If we get that move, I'll look to scale that at 2241. And this trade, right, this is an HPMR setup, and it's valid, I would say, to 9:50 a.m. I'm really not interested in necessarily taking a trade right into 10 a.m. because that's when we're going to get barking. And as many of you have noted, historically, those two members are pretty hawkish. So they may not be favoring lower rates. We'll see what happens. But you can see how close we got to the trigger. Very close, but close isn't enough. Now, here's the thing. Some of you might be a little bit more aggressive. So as long as you know directionally which way I'm looking, obviously everyone can choose to be a little bit more aggressive and buy. But what I would say is, wait as often as you can for the trigger, because that's where the risk reward is going to be best. And that's where the setup that I'm looking for is also going to have the lowest cost and be in the zone where I would expect the buyers to step in. And by the way, if I don't get it set up by 9:50, the other thing that I can do is just wait for Barkin and just wait for Schmid and see if either one of them send prices lower. All right, the other setups that I'm looking at Bitcoin, crude, bonds, and gold on my other screen. Not really grabbing me as far as levels, but maybe gold. Gold's still a choppy mess. I do like gold miners a little bit better than gold. We talked about that yesterday, where as we start to build our swing trades in related to gold, I'd likely favor gold miners, Newmont Mining, Agnico, those names. So I would look to see, is there a setup in GDX? This is gold miners. This is the ETF for gold miners. Or am I going to set up a trade in GC, gold futures, or GLD? And interestingly enough, they both have something that would work, although I don't love it. And what would work is, here's our Darvis right there. However, we would be below, take a look at our previous session close, we would be below the previous session close. So I would wait specifically for the Darvis level. So let's put here at 936. GC, I'm going to be watching this low right there, which is 3390.6. And I would look for GLD calls potentially then. Now, what else would I like? I sure would love to see that maybe we're oversold on our oscillator here, our secret squiggle that shows overbought and oversold. Oversold is just another word for basically indicator-based support. I would absolutely have a tighter stop on this one because the buy would be below the previous session close. So we'll see how that goes there on gold. If we get down there, maybe there's something to do. What else? The only other setup, and I can't say I love it, but it could be interesting, is in bonds right now. Let's take a look at bonds. Bonds are trading in the lower half of the range, which is exactly where I would want them to be. If I was going to buy a TLT below the previous session close. Now, I can always choose not to do this. I can always say, you know what? I'm not really interested in a buy in a symbol that's below yesterday's cash close, yesterday's close, that PSC that we talk about so much. It's a sentiment read. However, if I take a look at 13 August 86 calls, there's not enough liquidity there. 15 August 86, there's plenty of liquidity. I'd probably go down to 85. Because we might, well, actually, no, we could do 86 calls. So I look at 15 August, 86. I'll just put in a choice if you want to go with the 85. There's no problem with that. 85 call. Now, why the choice? I'm always looking for liquidity, and I'm always looking at buying an option that's at least above $1. I don't want to buy 60 cent, 80 cent, 40 cent options. So in this case, what I would keep an eye on with bonds would be a zone starting at, and it wouldn't be aggro, it'd be a moderate, which, by the way, if you take a look at the position sizing guide, the position sizing in terms of dollars is the same. And remember, that's completely automated. You just need to download that spreadsheet from the files drive, plug in your account balance, and then it will spit out how many dollars worth of options you're allowed to buy once price reaches the different triggers. So there's no guesswork here, gang. So I can look at a moderate in the middle of that zone or a conservative. I would keep a tighter stop loss on this one, gang. Let's go with 15%. And my initial target scale out is going to be 114.30. So I'm going to presume that this is going to be heavy, and I'm going to presume that it won't get above the previous session close until it does. And that means I'll put my target below that level. Okay. So it's got to trade down to that level. And then we can consider whether or not we want to buy. Morning here, gang. I want to get whatever fills I can get before. So yes, TLT, you could definitely look at TLT when it tests 114.21 and then 114.18. I would pick one or the other. And then if you want to buy those calls, great, 15% premium risk on those. All right. What else is interesting? Okay, so this is what else is on my radar as we wrap up our kind of morning intel. XLC is in an uptrend. XLY is in an uptrend. XLI, IYT, these favor the NASDAQ and the Dow so far. XME is in an uptrend. So these are sectors that are in uptrends. So we're going to go scan those next. All right, so that's what I've got so far for the morning. We've got the time crunch until 9:50. Great to see so many of the trials in the room. Just soak up the first day you're here. It's a live trading environment. This gives you a process for maybe the first 20 minutes of each and every day. And then we can, figure out what has the highest probability of following through for this morning. And then at 10:30, we'll shift gears and manage the swings, which have been really great.